Okay, good afternoon, guys. This is again your Prof. Zeus. Sorry for the interruptions. Okay, something's wrong with my other phone. Anyway, so we are in the recording function, and I don't know until to what extent was the recording. Okay, so let me just go back a bit. So, in terms of recording, the first thing that you have to understand is the chart of accounts. So again, this is the listing of all the accounts that the company will be using. So we have these accounts, okay, and then we assign account codes for each account. Okay. Now, can this be revised? Yes, because as the company grows, certain accounts would be necessary for them to catch up with the transaction. So we could revise this. We could include the new accounts. We could delete old accounts, okay, or accounts that are not being used. Now, another one is in terms of recording. Okay, of course, in accounting, we are following the duality principle. Okay, so here, for every transaction we know that there are at least two accounts affected. Okay. Now, so in terms of rules of debits and credits, okay, what I did is to lay down the debits and the credits in terms of the T account. Okay, and also I put here the accounting equation: asset is equal to liabilities and owner's equity. So if you would notice, I put assets under debit, liabilities and equity is on the credit side. So any transactions that increase assets is debited to the asset. Now, any transaction that decrease the asset will be credited to the asset account, okay? Because it's on the asset is a normal debit account balance, okay? Liabilities and equity naman, if you would notice, it's on the credit side. So therefore, any transactions that would increase liabilities will be credited to the liability account, okay? Any transactions that would increase owner's equity will be credited to the owner's equity account, and vice versa. Transactions that would decrease liabilities and equity will be debited to the liabilities and equity account. Now, in terms of revenues and expenses, these are what? Income statement account, right? Now, in terms of income statement, now remember, income statement is actually what? An extension of your owner's equity, okay, account. So, extension siya ng owner's equity. So, therefore, revenues actually increases the equity. So, any increase in revenue would be a credit to the revenue account. So any decrease will be debited to revenue account. Now, expenses on the other hand would decrease your owner's equity. So therefore, any increase in expenses will be a debit to the expense, and any decrease in expense will be credited to expense. Okay. Now, using this as a guide, we will now go for the recording of transactions. Okay. Oops. Sige. So let's make use of this one. Okay, so number one, I think we can just tear this off para hindi tayo mahirapan, no? Okay. Okay. Although we're not using general journals for now, we're just using, a worksheet, okay? Let us pretend that this is a general journal, okay? So we have the date. Then the particulars. Then we have the folio, and then the debit, and then the credit. Okay? So that's all we need. Okay? So number one, Zeus invested 250,000. So again, sabi natin, there's an increase in asset cash. So therefore, debit cash. Sorry, date is December 1 for 250,000. And then credit Zeus capital for 250,000. And then we put a short description of the transaction. Okay, that would make this entry a complete entry. So we can say initial investment. Okay, and then two. Okay, there's an increase in prepaid rent. So prepaid rent is an asset. So therefore, what did we say about assets? Okay, any increase in assets would be, okay, debit to the asset. So debit prepaid rent for 36,000. And then, what did they use to pay off the rent? It's cash. So therefore, credit cash. Because cash decreased, right? For 36,000. So again, simple explanation. Payment of rent. Okay? Now, if you would notice, no, yung ating credit is indented. Okay? And then number 3. Okay, number 3 is what? Okay, there's an increase in asset office equipment, so therefore we will debit office equipment. For how much? 30,000 pesos. And then there's an increase in liability, so credit accounts payable for 30,000. Okay, so therefore explanation, purchase of office equipment. Office equipment. Okay, and then 4, purchase office furniture. So therefore there's an increase in office furniture. Office furniture. Debit for 20,000. And then what else? There is a what? There's a there's an increase in accounts payable. So therefore the credit accounts payable. Na duduling ako. 10,000 and credit cash for 10,000. Okay. So purchase of furnitures. Lumabasa ko ba yung sulat ko? Number 5. Okay, number 5. So rendered consultancy services to ABC for 50,000. So ano nangyari sa atin? Meron tayo income statement, account revenue, and then we have a receivable. So the increase in asset receivable, so debit accounts receivable for 50,000 pesos. And then credit your revenue. Sabihin natin yung revenue na lang for 50,000 pesos. Okay? So therefore, to record revenue. Okay, we can also put here the name ABC. Okay? And then number 6, rendered consultancy services to AEG for 30,000. AEG paid in cash. So therefore, nakalagay dyan, there's an increase in asset cash. So therefore, debit cash for 30 dahil nagbayad yung customer. And then credit your revenue for 30,000. Is there a need to put the name with cash? No, because we're not monitoring cash as of this time. Okay, so to record revenue. And then number 7. Okay, so we paid the equipment. So this is the equipment. So therefore, there's a decrease in liability. So we will debit liability accounts payable for how much? That's 30,000 pesos. And what did we use? Cash. So credit cash for 30,000. Okay. And then 8. Okay, 8 paid electricity. So it's an expense. So therefore, debit electricity, or sabihin natin utilities na lang pala ginamit natin. Utilities. Utilities. And then credit cash for how much? 5,000. Okay, so paid utilities. And then 9, paid salaries. Okay, so therefore there's an expense, increase in expense, salaries for how much? 10,000. And then what did you use to pay? Cash, 10,000. Okay, what else? Number 10, paid the billings of PLDT. So therefore, we can say communications expense. Okay, how much? Or utilities na lang din, no? Utilities. Magkano to? PLDT 3,000. and then credit cash for 3,000. 11. Collected ABC account in full. So ABC here. So we have collected this, so we receive cash. So therefore, there's an increase in cash for 50,000. And then we will credit accounts receivable for ABC. From ABC for 50,000. Okay. So I eliminated the short explanation. You can anyway you can do it. Okay. 12. Purchase office supplies for 10,000, paid 30%. So there's an increase in office supplies or prepaid. Prepaid office supplies for 30,000. But they paid they paid how much? 30%. So therefore, what did they use to pay? Cash. For 30, this is what? 10,000 lang pala, 10,000. Then this is 3,000. And then accounts payable is for 7,000. Okay. And then we can just go to the next one here. Okay. Dito na natin gawin. So you have the date. Ay, naman sa ano, paano gawin ito? Okay, so we have the date again. No? So we have the date, the particulars, the folio, and then the debit, and then the credit. Okay, so we are now in transaction number 13. So this is December 13. Okay, so there's an increase in accounts receivable. Okay, because we rendered but the client didn't pay. So accounts receivable, and then credit the revenue account for how much? 100,000. Okay, and then the last one, collected 24,000 from some court for the retainer fees. So nakakollect tayo, na-collect natin the cash, right? 24,000. And then there's an increase in revenue for 24,000 as well. Okay, so we're done with the recording of the transaction for this business. Okay, so what is the next procedure in the accounting cycle? Okay, so we have recorded the transactions in what we call the general journal. Okay, the next step is for us to what? To summarize them, no? And to group the transaction, classify the transaction in terms of the account. So that is what we call posting to the general ledger. Okay, now let us instead of having a ledger, let us just do or make use of a T account. Okay, so we'll do T account and then post all the transactions in T account. So for instance, so here's a T account for cash, and then T account for your accounts receivable, and then the T account for prepaid rent, and then the T account for office supplies, and then the T account for, we have office equipment, and then the T account for office furniture, and then what else? Samples, accounts payable, and then the account for Zeus Capital, and then we have the account for the revenue, Empty account for the various expenses, right? But iba-ibahin natin siguro utilities, salaries. Yan ba ba? Okay. Okay, so let us now extract, no, and then post it to the general ledger. Now, sabi ko kanina, we have what we call the chart of accounts, no? So in the general ledger format, what we will do is the assigned number, account number, now will be put into this, into the ledger, okay, into the ledger account. So for example, this one, so cash is 10, so that's 1001, receivables is 1002, and then prepaid rent is 1003, and then office supplies is 1004, and then office equipment is 1005, office furniture is 1006, accounts payable is 2001, capital is 3001, and then you have the revenue 4001, then you have the utilities 5001, then 5002. Okay, so there you go. Okay, so let us now post the entry. So debit, this one is cash. So you have cash of 250,000 debit. Okay, so we're okay with this. And then we have the capital for 250,000 as well. So we're okay with this one. Okay. So here we will put the 1001 in order to denote that this has already been posted. Then this is 3001. Okay. And then prepaid rent 36,000. So therefore here 36,000. And then credit cash for 36,000. Okay, so we're done with this one and this one. So therefore 1001, and then this one is 1003. Okay, next, office equipment. So office equipment is here. So there's a debit of 30,000 for the office equipment. So we're okay with this one. So this is 1005. And then credit your accounts payable for 30,000. Okay, so this is 2001. And then office furnitures, that's 20,000 debit. Okay, so this is 1006. And then accounts payable, credit for 10,000. So this is 2001, and then cash for 10,000. So this is 1001. Okay, and then next. So we're okay with this one, and this one. So accounts receivable for 50. So there's a debit for 50,000. Accounts receivable, so this is 1002. And then revenue for 50,000. Credit. Sorry, 50,000 po pala. 4001. And then there's a debit to cash for 30,000. So this is 1001. And then credit to revenue for 30,000. So this is 4001. Okay. And then there's a debit to cash for 30,000. Sorry. Ayan. So we're done with this one. Accounts receivable for 50. We're done. For 30, we're done. Right? Okay. And then we're done. So here, accounts payable, 30,000. So accounts payable is debit for 30,000 pesos. So this is 2001, and then cash is credit for 30,000. So this is 1001. Okay, so we're done with this one. And then electricity or utilities for 5,000 pesos. So this is 5,000 pesos. So we're done with this one. 5001. And then cash for 5,000 credit. So this is 1001. Okay. And then you have salaries. Okay, salaries. So salaries is 10,000 pesos. So this is 5002 in credit cash for 10,000. So this is 1001. Okay, kukulangin tayo sa credit. Okay, then you have the utilities again for 3,000 pesos debit. So 3,000. So we're okay with this. So 5001. and then credit to cash for 3,000. This one, so that's 001. And then there's a debit to cash for 50,000. So this is 1,001, and then credit to accounts receivable for 50,000. So this is 1,002. Okay, and then you have prepaid supplies debit for 10, prepaid supplies debit for 10,000. So that is 1,004. And then credit to cash for, okay, let's just use this one for 3,000. 1, 2, 3. So we're okay with this one. And then accounts payable credit for 7,000. 7,000. So that's 2,001. And then here, so debit accounts receivable for 100. Debit accounts receivable for 100,000. So we're 1,002. And then credit revenue for 100,000. Revenue. Credit for 100,000. So that's 4,001. And then debit to cash for 24,000. And then credit to revenue for 24. So this is 1,001. And then 4,001 for 24,000. Okay, so there you have the account analysis, okay, for the transaction. So what are we going to do is we are going to extract the balances of the accounts, okay? So for cash, let us take the debit side, 250 plus 30,000 plus 50 plus 24. So that's 354,000 on the debit. On the credit side is how much? That's 36,000 plus 10,000 plus 30,000 plus 5,000 plus 10,000 plus 3,000 plus 3,000. So there's a credit of 97,000. So therefore, debit minus credit, 354. Okay, so 257,000. So the ending balance of cash is 257,000. Okay, lagyan na natin siya. Now for the receivables, you have 150,000 and this is 50,000. So therefore the end balance is 100,000. Okay, for the prepaid rent, sorry, why is this on the credit? Sorry, 26,000. See, even I make mistakes in terms of posting, so be very, very careful. So we have 36,000 here. That's the credit side, and then here is 1,000. Sorry, 10,000. So this is 30 plus 10 plus 7. That's 47. So this is 47,000 less 30. So the ending balance is how much? 17,000. Okay, and then the revenue, how much is the revenue natin? 50 plus 30 plus 100 plus, sorry, 50 plus 30 plus 100 plus 24. So this is 204,000. And then this is 8,000. And then this is 10,000. Okay, so we have already extracted the balances of the account. So anong gagawin natin ngayon? We are now ready to proceed to the next chapter, to the next step, which is the preparation of the trial balance. Okay, so let us just say that the accounting, that the firm is Zeus Aboy. Then we have trial balance as of December 31, 2020. Okay, so we'll start with the asset. Okay, cash. Okay, so this is for the debit, and then for the credit. So cash is how much? 257,000 debit. And then you have accounts receivable. Accounts receivable, magkano siya? There's a balance of 100,000 debit. And then you have the prepaid rent. for 36,000 debit. And then you have the office supplies for 10,000. And then you have the office equipment for 30,000. And then you have the office furniture for 20,000. And then you have the accounts payable for 17,000. That's on the credit side. And then you have the SUS capital for 250,000. And then you have the revenue for 204,000. And then you have the utilities. That's on the debit, 8,000. And then you have the salaries for 10,000. Okay, so what we will do is get the totals of the debits and credits, and then that should be equal, okay? So therefore, 257 plus 100,000 plus 36 plus 10 plus 30 plus 20 plus 8 plus 10. So this should be 471,000. Dapat yung kabila ganun din, no? 17 plus 250 plus 204. 471. Okay, so the debit is equal to the credit. Okay, so this is the purpose of the trial balance, to check the equality of the debit and the credit. Okay, what if the trial balance here, what if the debit is 270 and the other one is 280? So for that actually is saying that there's something wrong with the trial balance. Okay, either in the posting or in the recording. Okay, but is it possible that although we have equal debit and credit, does it mean that we have recorded all the transactions the proper way? That is not a guarantee. Okay, because we could have it's possible that we could we have misclassified certain transactions, or perhaps we use different accounts, or the wrong account title. Okay, but still, if that is on the right side of the account, then the trial balance would still be balanced. Okay, so again, so we have the transaction analysis, then we have the recording, and then the posting to the ledger, and then of course the trial balance. Okay, so next session will be for the adjusting journal entries. Okay, bye for now, and stay safe, guys. Again, this is your Prof. Zeus, and I'll see you again.